Hey traders, Raghee here. Welcome back. If you just completed the non-farm payroll session with me, we can definitely cover some questions from that if you'd like. And also for those of you that's joining us this morning, please check out the replay of non-farm. You can see the way in which we prepare for hot zones, day trade, things like that with automated levels using the HPMRs, multi-trend, slow stow, some cool stuff. All right. So as always, thank you so much for being here. And let's go ahead and jump into sort of the aftermath, if you will, of NFP. But before we do that, let's just take a look at the data. All right. So we're going to scroll on down. For those of you that joined me for that earlier session, you notice that I'm not obsessed with where the data came in at. I'm not obsessed with whether I haven't even refreshed this, right? So I'm going to refresh this with you all right now. Okay. Average hourly earnings steady. In fact, they ticked up a little bit, which tells the Federal Reserve, oh, this is what we wanted. We want to see some wage growth. Got it. All right. Non-farm employment change. 236,000 was greater than the 228,000. We had an upward revision. So I don't know if this would be considered bad news. I mean, I guess it would not be considered generally bad news. Unemployment rate click down. So, on there's two ways we can look at this data. All right. And let me show you what I'm talking about here. One is sort of this 4-week rolling moving average, right? What was the previous? And then what do we get today? That's one way. What's the rate of change of the data? Well, this is actually 326 and we got 236. I mean, that is heading lower, right? Week to week. Not terrible, but that is one way of looking at this data. So this 4-week rolling moving average. Expectations were for 228. So obviously that is a beat. Now you'll probably notice when you look at other calendars, I'm going to jump on over to the calendar over at Trading Economics. It's another calendar that I use often. And let's go take a look at that. Expectations on this, all right, previous were 326. This forecast was 250, and we got an actual of 236. So isn't that interesting? If you take a look at Forex Factory's consensus, their expectation, 228, you take a look at Trading Economics, that's 250. 250 is then therefore a myth. If I look at that, that's a forecast. Consensus was 239 here, and the actual is 236. That's a slight miss, right? Now, another place I like to look, because I think a lot of folks think there is just one expectation, and that's frankly not true. If I take a look at, let's see, I haven't jumped on over to Estimize, and a lot of folks don't know you can use Estimize as well. And where is let's see, economics, and I am curious about that. Let's see, labor and change in non-farm. There we go. So this is Estimize. This is actually really cool data as well. And let me take the dark reader off this. There we go. Watch out for the brightness. Ooh, that's so bright. All right, so here we go. Estimize consensus is at 234. Isn't that interesting? So it's kind of a mixed bag, more or less in line, maybe a slight beat, maybe a slight miss. And that probably accounts for the lack of massive volatility we had. So if you're wondering, yeah, Rog, why was that on par in terms of, if I'm looking at, is this on par with other non-farms? No, this was a pretty sedate non-farm payroll. And likely you can see why. There really wasn't much of a chasm between what we got and what we expected. I will say, having now looked at the data, I'm a little surprised that we shot up. I'll be straight up with that. That's yet another reason why I don't give a rip about what's happening with the number, right? If I looked at that number and pondered it, price action's moving around, right? I'll miss a trade. And then my bias as to what it should mean and what it really means is in price. What it should mean, if we want to sit around and navel gaze about the number, turn on the television. There's plenty of people on TV that can do that for us, right? But the fact of the matter is, notice I'm only now 35 minutes later actually caring about what the data really was. I just know there's a hot zone. I know there's an expectation, I know there's an actual, and then the price is what's going to tell me what we traders and investors think about it. So notice we went right to price. We went right to our zones. We went right to our setups and structure. Okay, so that's kind of where we are at 9:05, and in terms of the movement we saw on the data that we got, kind of surprising. All right, so let's go take a look. We're looking at the S&P right now. Let's go take a look at how the 6E moved, and that's going to be inverse to the US dollar. And 6E, take a peek, moved on down to support. It moved overall higher. I mean, if you want to just take an overall, after we got, let's see, that's 825. There's your big down candle. Wow, that's US dollar strength. That's now been obviously taken back at 835. Take a peek. We just sunk right into the zone. That's interesting. The initial reaction from the US dollar was strength on that data. Okay. Initial reaction from bonds were higher yields on that data. And this is a zone that I was actually looking at for a potential buy. All right. So unfortunately, the trend went down on us, but again, bouncing from that area. So initially, dollar strength, which has now been basically taken back. Initially, higher yields, which now, as you can see, with the bounce has mostly been taken back as well, maybe half of that, right? So that's where we sit. Very unusual reaction, knowing what the data was, and you can see probably low participation. A lot of folks are not at their desk today, right? And so what we can do, and this is what I'm going to do over the weekend, and when we get going again next week with my Sector Secrets Mastery folks, we're going to start looking at probably some 1-hour time frames for opportunity and where some of these daily price movement ranges are going to be. For those of you that are curious, the green and the red, these are the hourly price movement ranges. This is what I do with day trading. There's probably no more a powerful indicator in terms of support and resistance for my day trading than those volatility and time-based zones. But when I move on over to the hourly, this is now where I have the DPMRs. So this is based on the day of week as opposed to the hour of day. So this is based on an hourly historical volatility. This is focused on a daily historical volatility. So these are going to be wider ranges as opposed to the hourly. This is going to be better for swing and overnight exposure as opposed to day trading on the HPMRs. So similar process, different data, right? Different data. All right. So I would love to be a buyer in the euro, just not near a zone that I can do it from, although the 200 propulsion is oftentimes a very important level. In fact, the last issue of the reboot of This Week in the Market, and I'm happy to talk about it on Sunday when we have our This Week in the Market show at 6 p.m. this Sunday. I will be on for 6, getting ready for Monday. And then on Monday, because we have the bank holiday, Good Friday, the office is closed, we will release This Week in the Market on Monday. So I'd say probably around lunchtime, you should have This Week in the Market. My Sector Secrets Mastery folks, I'll put the PDF into the room drive for us all, so y'all get a little early access. I'll throw that PDF into the room drive there. All right. So if I look at this 200, this is a level that I talked quite a bit about in the last issue, the most recent issue of This Week in the Market. And that was this idea that there's kind of a bullish and a bearish hemisphere on every chart. 60 on the hourly, bullish hemisphere. Euro on the daily, that's an uptrend, gang. This is overall dollar weakness, and nothing changed there with non-farm. So do I like Euro US, Deborah? I do. The question is, do I want to go with the hourly setup, maybe off a DPMR and an oversold stochastic, meaning, so I want to take a lot of the jargon out of trading, but there are certain words that we're going to use as traders that we just need to know, right? If you're a chef, you know, if you're a, you know what a julienne is, you know how to saute. They're just the words of that activity, right? And there's words within the trading world, which are just sort of, those are the words of the activity. But What is a slow stochastic? I mean, I could talk about the calculation, but who cares, right? What do I do with it? Do I want to build a clock, or do I want to know what time it is? I want to know what time it is. I'm not super curious about all the nuance of what makes a slow stow, other than, why does it give me overbought and oversold? And then just to fine tune that to be more useful. Overbought. What's another way? So let's de-jargon this, shall we, on a Friday where the markets aren't really open and we can take a step back, right? Think about this for a moment. If I'm looking at a high, another synonym, if you will, is resistance. Is everyone with me there? Another synonym would be what? A ceiling, right? In the context of a sideways market, we can consider that overbought. In other words, we don't expect the buying to continue. Overbought. These are all pretty much the same thing. A high, resistance, a ceiling, overbought. What's another way of looking at that level? It's a supply level, right? These are all very common terms that traders will use to simply reflect a level at which we don't expect prices to go much higher through. We expect prices to stop near or at this high, resistance, ceiling, overbought, or supply level. That's it, right? We could call it whatever cutesy thing we'd like. That's usually probably 5 of the most common. Okay, does that make sense to everybody? I know if you're watching this on replay, but my live folks here, does that make sense? Maybe you've heard some of that terminology before, right? You're thinking, what does it even mean? That's all that it means, right? So let's talk about the volatility support down here. What is it? It's support. It's a floor, right? It could be a low, right? So we have floor. What else is it? It's oversold. So the oversold means we don't expect a whole lot more selling below that level. What else could it be? It's a demand level. That's it, right? And these are 5, to the up and downside. These are common terms for the same darn thing, right? We all like our own words. Words mean different things to each one of us. We pick the words that are most meaningful to us, right? Low, support, floor, oversold, demand. Same thing, right? And whether we derive that from price, whether we derive that from volatility, whether we derive that from volume, right? That's where the zones that we are looking at from trader to trader will change, right? Most traders don't have any knowledge of this gray zone because they're not looking at time and volatility zones, right? The 200 propulsion, that's something everyone can look at, right? It's the 8 exponential moving average crossing the 200 exponential moving average at the core of what it is. Here is the important part. And if there's ever anything you ever get from your time with me, I hope it's this one thing. Structure dictates strategy, right? We all can have different strategies. We can all have different indicators. That's fine. There's no best indicator, gang. The whole idea is to have a well-rounded indicator set. Price indicators, volume indicators, volatility indicators with a respect for time. Those are the 4 factors of the market, right? So if I look at structure dictates strategy, gang. You notice with the non-farm payroll thing, when we were over in the ES, what did I say on the 5-minute chart? That was all structure. Structure dictated strategy. We had a neutral environment, which, by the way, now has gone green. So this was all neutral before the hot zone. Okay. The neutral hot zone means that when we get a slow stochastic, that's overbought. Now you know what oversold. Now you know what oversold means. Oversold is a floor. Oversold is a low. Oversold is support. It's all those things we just talked about. It's not likely to keep going down. It's demand, right? That's what that means. And that preceded the move higher. So either I'm looking for a buy or nothing. Those are things that are going to help us determine which direction we want to trade, right? And what type of style we're going to use. This is not a trend following environment. A neutral environment means I need those oscillators that are trying to identify where the floors and ceilings are, where the overbought and oversold levels are, right? Okay, so I hope that makes sense. Again, if there's anything you ever get from me, you need a consistent, easy way to look at a chart and in an instant say, this is bullish momentum and this is bearish trend, or this is neutral momentum and this is a bullish trend, whatever it is. And that's what these 2 rows do. right? However you want to do it. This is just the way that I do it. Okay, so let's see here. The entered non-farm payroll, parked an entry on Euro US. Oh, so you did trade the Euro on that one. Nice, nice, nice. So before, and therefore, Deborah, if you followed the process, which I know you did, because I know you know it, neutral. Look at the low on the slow stochastic, a tool that's job is to go back and forth, telling us where something is overbought and when something is oversold. And now you know all the synonyms to that, whether you want to call that a floor, support, etc. Right? Okay. So we knew where we were, we knew where the stochastic was, and then we just wait for price to reach our zone. And I really think of that zone in no different a way. My favorite analogy for trading is typically baseball. It's probably my favorite sport too. And if I take a look at the way in which I think about what it means for us to trade, this is what I'm thinking. That's us. The market's the pitcher, and we're waiting for that pitch over our zone. My zone might be different than your zone. Your zone might be different than your friend's zone. This zone is what we're waiting for. And so if I can identify my zone with volatility, with price, whatnot, and I already know what it is, it's already sitting in a green or red zone or a white or gray zone on my chart, I'm right as rain with that. So I hope that makes sense. So well done, Deborah. That's exactly what you did. I love it. I love it. I love it. Is the British pound stronger than the euro right now? So we can look at the 6B. Sure. Forex is trading today. So 6B, when you say right now, the euro is, yes, stronger than the British pound. Correct. The British pound on the daily is trying to go into an uptrend, but on the 5-minute, if we're talking about the 5-minute being the right now, it's in a downtrend. However, another way you can look at currencies is in a relative performance perspective. So if you head on over to FinViz, FINVIZ, go to Forex, go to performance, and then look at today's lineup, right? This is the 1-day relative performance. Here's the pound down here with the yen. By the way, that yen weakness is indicative typically of risk appetite, which is strong stocks. I look at the last week. There's a yen in the middle, but there's your pound, right? So if you were to ask me generally where the pound is heading, it's the strongest currency over the last month, right? If I look at what it's doing today, it's the second weakest. So now this is the difference between whether or not I'm using a 1-day relative performance on a 5-minute time frame, which is what it's really ideally suited for, more of a day trade, or whether I'm stepping back and looking at a 1 week, a 1 month, or even a 1 quarter and looking at the longer term relative performance. So I guess it depends on what your look back is and what time frame you are trading. Okay. All right. Question here. Hey there, David. On the 5-minute, if the price goes to the HPMR support or resistance zone, when would I pass on the entry? So for that level to hold, structure needs to validate that. In other words, if we were to, let me grab something we haven't looked at yet, or that I really haven't looked at either, so we can do a fresh analysis. Gold. All right. When can I not buy gold in a red environment? In a red environment. So if you look at all the opportunities possibly to short on the way down, mostly red grab candles, etc., I can't buy that. Even though it bounced a little bit, I can't buy that. Could I buy that on the 1 hour? So just because the 5-minute doesn't let us buy doesn't mean that the structure may not be different on other time frames, which is why in the Sector Secrets Mastery Room, multiple asset classes, stocks, options, futures. We look at currencies, treasuries, energies. We look at the sector ETFs. We look at the individual stocks within them. We look at the indices, right? And we look at them across different time frames, day trading time frames, swing trading time frames, even position trading, more portfolio friendly time frames, right? Because if we have an easy way to look at the structure, why not, right? Let's look at another market. Oh, you know what? Let's take a look at crude oil. Let's do the same thing with crude. When am I not allowed to use certain zones? Okay. Well, in this case with crude, which I wouldn't suspect is going to be really in play, I'm allowed to take advantage of either zone, the green or the red, because we're neutral, right? But I think the best example was the ES. in some way, because it was neutral. I could have been going to the bullish or the bearish. The only time I'll say no is when the trend is down and I'm looking for a buy. The only time I'm going to say no is when the trend is up and the signals are saying it's time to short. That's a mismatch. That's a big cup of nope. So David, I hope that makes sense. If structure dictates strategy, structure's also in that word structure, it's also what's the path of least resistance. Okay, gang? All right. So as always, thanks so much, gang, for joining me for Charts and Coffee. I really appreciate it. I appreciate the time. Again, I hope you spend some time with friends and family. Get some time away from the screen. I'll get the this week in the market report out to you all by Monday. I think the office should be able to upload that to the site. If you're a Sector Secrets Mastery member, you get that free with your membership. So that's a $79 a month you're getting right with your mastery. If you're not a member of the mastery and you just want the newsletter to take a look at my big picture macro watch list, breakdowns, levels that I'm looking at week to week, check it out. We now have the 30-day trial for $7. Holy cow, that's pretty good. You'll learn, if nothing else, that 1 month, you will learn a lot about analysis because I break things down, no jargon. Most of the tools that I discuss in This Week in the Market, gang, and I remind you with every issue, most of them are available free, okay? You can head on over to TradingView and grab my grab candles, wave, propulsion. You could set up a 21K 3D slow stochastic. You do not need a whole bunch of proprietary tools. I do use them, but for most of what we break down in This Week in the Market, you do not need them. It is not a jargon-laden report. All right, gang, as always, have a great one. I'll see you on Sunday, 6 p.m. for This Week in the Market report. Now, of course, it's recorded, so if you can't attend it live, of course, I would understand. Sunday's kind of a strange day to have the report, but I do want to prepare for Monday. All right, gang. Be good to each other. Thanks as always. I'll talk with you soon.